has never gone through anything like this before. And the next 20 years, the next 10 years, and maybe even the next 5 years are easily going to be the fastest rate of change of technology and change to society and human life. We don't even understand, and we'll talk into a lot of the downfalls of some of this stuff in due course. But I'm not worried about this. I'm trying to unfuck your future. Some of this is going to really fuck your future in 20 or 30 years' time. But we've got time to figure that out because it's unstoppable. But what we need to do is make sure we don't get disrupted. And the only way of doing that here is investing in it. We've talked about this exponential age thesis, all of these technologies coming together all at the same time, that's going to literally change everything we understand about work, life, politics, culture, the lot, and human life, and disease, and all of this. And it's not some pie in the sky stuff. It's all happening. There's been decades of investment in this, and the products are going to start getting launched. So I've talked about the point where this business cycle has brought prices down to the long-term trend. The easiest way to show this to you is here's the chart, the log trend of the NASDAQ. Beautiful uptrend. Here we are, 2 standard deviations oversold. So usually when you hit something like this, you're looking to accumulate here because the next phase is the continuation of the trend. You can try and argue with me that, well, technology, it's overvalued and there's inflation forever and it's going to stay low and it's going to collapse. Maybe some of that, maybe none of that. Maybe the relentless force and speed of this means you don't have any choice in a low growth world but to invest in growth itself. And it doesn't almost matter how overvalued they are. And that overvalue relationship, I think people are misunderstanding too. But I have a very different thesis on this. So you can choose to avoid it and say it's expensive, it's going to trade sideways, it's going to trade down, we got another 10 years, this is 2001 all over again. Well, if you bought technology at the low in 2001, you did very well. At 2002, you did very well indeed. We've had the fall. Most of this stuff, the exponential stuff, is down 75, 80% to the low, and it's bouncing. Some of these things are up 100% this year alone. And that's just the start of where this is going. So we can have chop, we can have complications with interest rates, but really, cost of capital, 5%, 6%, 4% makes no difference to things growing at 100% a year. Something that goes from 0 users to 100 million users in a month doesn't give a shit about your cost of capital. It also doesn't care about your rate of inflation. It doesn't care about your opinions either. It just happens. And that is a staggering realization that you have to deal with. It's like, okay, this is all going on regardless of all of the macro doom and gloom, of all of the doom porn that's spread on Twitter all day. And they might be right. The technology is still going higher. Just get your entry point. I think the entry point is here. I've argued for a long time that one of the reasons why shares overall and most assets go up over time has actually been the debasement of fiat currency via the quantitative easing, which I think is debasement, and I think it changes the value of the denominator and it makes optically assets look higher. So if you devalue the purchasing power of the dollar, asset prices, scarce assets, look like they're more expensive because the dollar is worth less. People confuse this so much with the dollar itself as a fiat currency versus the yen. Everybody's doing it at the same time. The world's reserve currency is the one that matters. And when you devalue this, things that are non-scarce, like food, even to a certain extent energy and stuff like that, that doesn't actually move. What moves is things that are finite or have growth as part of the equation. So here is the NASDAQ divided by the Fed balance sheet. It's grown at 7% a year versus the Fed balance sheet. So it's outpaced the fall in the denominator or the debasement of currency, which is great. You need that. That is how to unfuck yourself, is you have to outperform the Fed balance sheet. You might have a view that the balance sheet's never going to get used again. I think that's a pretty brave view, considering its linkages with demographics, the linkages with debt and interest payments. I think it's almost impossible not to use it. We have to go through a very long period of negative real rates to make this all doable, and we ain't there yet. So I look at that chart And you can see that the NASDAQ has outperformed well. It kind of looks to me like it might be some sort of wedge pattern, and that maybe if it breaks higher, we've got another big move to come. It would not surprise me. I don't think anybody's even valuing stuff like Google or Microsoft right now, considering what we know about the technology that's embedded in those firms. I don't think the market even knows how to value this, but it'll come back and people will start thinking, attaching a future price on it, as opposed to the price of the business today, which is how most people are valuing those companies. Now, if we compare the NASDAQ against the S&P, well, this is the S&P in balance sheet terms. It's actually grown at 2% a year. It's barely grown. So basically, it's grown by dividends. So the S&P has traded sideways once you take into account the denominator. So you've made no money. That's pretty true of property. That's pretty true of gold. In fact, gold is actually lower, but generally speaking, most assets have actually not outperformed the balance sheet at all. In fact, the only two that have are crypto and the NASDAQ, or technology stocks in general. So bear that in mind. Also, there's a lot of people on Twitter, a lot of people argue about, well, technology, it's all overdone, and, this is the rise of value, and these companies aren't going to continue. I can't see that with the backdrop I've just laid out. And when you look at the chart, here's the chart of the NASDAQ versus the S&P. It's pretty bloody obvious, right? Are we going to reverse all of that because technology's changed and suddenly people want to buy General Electric and AT&T and Occidental Petroleum? Some of those can do fine. I don't have a problem with investing in any of that stuff. But I'm looking for the secular tailwind. And the secular tailwind is this super trend of technology outperforming everything else. Now you can see how technology got ahead of itself. It's corrected. It's back down to trend. Okay, super interesting. Now, what's super interesting is when we look at the cyclicality here as well. So here's the NASDAQ year on year versus the ISM. Our forecast at GMI, Julian Bittel went through on Pro Macro recently in detail. Our forecast is for the ISM to get down to about 37, maybe 40. But the point being is the NASDAQ already discounted it. And oh my God, nobody wants to believe this stat. It's like, oh my God, we need another leg lower, but what about earnings, blah, 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 blah. It's a very clear relationship with the business cycle to me. I can be wrong, and that's okay. But the work that I've done over 32 years suggests that really we should have probably put in the low already, because it's forward looking and it's expecting the end of the rate hike cycle and eventually the turn up of the ISM. My forward looking indicators gives me the turn up of the ISM somewhere around end of Q1, early Q2. We should see a lot of weakness before that. So the market is starting to discount it. So if we're at the cyclical turning point, maybe I'm too early, maybe stocks have another fall. Okay, fine. But the cyclical turning point, let's say stocks fall another 20% from here. If I'm right with a secular trend, your downside is 20%, your upside is 10x over the next 5-10 years, maybe less, depending how fast this stuff happens. So the point being is, in risk return, people are too short term with a time horizon. Oh my God, the market might collapse. You should be thinking, this is amazing. It's come back down to the secular trend. I can start accumulating here, and this will unfuck my future, because this will outperform the Fed balance sheet, and it will generate me wealth. And if my job is getting disrupted, my life's getting disrupted, I will have made gains from doing it. That is how it works for you. If I look at the exponential age basket, so I put a big basket together for GMI of all of the component parts of this, and it's not a perfect basket, but it's just a broad representation. Basically, that priced the ISM down at 35. So it's like a super negative business cycle, i.e. overshot to the downside like it overshot to the upside. Okay, so they're really cheap. And again, they're on their 2 standard deviation trend. So here we go. Cyclical, secular, the points meet. This is how to get a good entry around here in a long-term time horizon. So I don't care if it goes up and down 20% from here. And this is a way to unfuck your future. And this is why I've been focused on this and I've tried to explain to people. Also, the exponential age basket, it broke this downtrend. It's now consolidating in a flag pattern. This thing exploded from the lows. That doesn't look like a market that wants to go back down to new all-time lows. That looks like a market that wants to consolidate and then go higher. That's my thought process on it. What's in my basket? Again, this is not a perfect basket. It's the best I could do initially. I've had to learn a lot of stuff here. I didn't know any of this stuff. I was a macro guy, and I thought technology was evil, it was overvalued, it was bullshit, and then I realized I was completely wrong. And in fact, it was the only way in the equity market to outperform the balance sheet. So what I've got in the basket is Apple, which is VR wearables, and I equally weighted it as well, just to not have this big market cap weights of these giant companies. Apple's about to come with breakthroughs in VR, AR, wearables, Internet of Things, AI. Arc. People hate Arc. Yeah, great. I love it now. It was down 80%. Why would you not love it? Even if she's half right, she can make a lot of money here, and I believe in her thesis. Is she the best stock picker in the world? Well, time will tell. Maybe not. Maybe it is. But directionally, she's absolutely right. And her thesis is absolutely right. Whether you believe her thesis on individual stocks or whatever, but overall, she's trying to buy the growth end of technology and says that we are in somewhat of an exponential age. Get it? BBH, that's the biotech ETF. Biotech, I don't even know how to approach that space. There's so much going on. I don't really know. Just buy a ETF with a bunch of stocks in it. That kind of makes sense. It's the Van Eck one. Coinbase got super killed. I think it's very cheap. I think with the FTX blow up and Binance has a good chance of actually being a very large part of the future here. And it's very discounted. I wanted an equity that has the digital asset trend in it. I've already got that bet on anyway. And, a big part of this is I have the digital asset bet. We'll come on to that in a sec. Esports is kind of like metaverse. So there is an esports ETF, so I've chucked that in it. Google, robotics, AI, fully self-driving cars, biotech, wearables, Internet of Things. I mean, they've got everything in Google X. And it's completely undervalued by the market. So I want some of that because any of these breakthroughs, Google are going to be a part of this. Meta, very hated stock. Love it when it gets this sold off. I didn't hold it all the way down. I started buying this exponential age basket in kind of April, May, and then added recently as well because the idea is a long-term bet and I don't mind a bit of volatility in it because I'm trying to capture the much larger upside. When stuff like Meta's down so far, it's either going to fail in its pivot or the market has wildly mispriced it. Its pivot is metaverse, AR, VR, and also digital assets, the integration of NFTs into Instagram. Super interesting. They get the whole story. Microsoft, clearly, they're just buying OpenAI. They have already AI. They've got massive amounts of data processing with Azure and all sorts of other stuff. Really interesting. And it's dressed up as a boring company. Galaxy, I just like owning gatekeepers and tolls, and Coinbase is a toll for retail and institutions, and Galaxy is the more institutional toll into the crypto world. Usually makes sense. Reliance Industries, you've heard me talk about this before. This is the Indian giant, the people that paid off, that basically took over the entire Indian telco market by underpricing data, took the entire market, ran up massive debts, and then paid off all of the debt in the fastest ever period of time. By raising money from sovereign wealth funds, Facebook, everybody else. And they're basically building out the entire infrastructure of this exponential age, from a green energy grid to oil refining to 5G, probably 6G, and then the applications layer of internet businesses, everything they are building within India. And India is incredibly fast growing economy. So you've got technology, the fastest growing economy in the world, with a young population, all wrapped up in this one stock. Why would you not? Robo, for robotics, another ETF out there, broad base of robotics companies. Are they the right ones? I don't know. Let's get direction in the right place. Semis, you've heard me talk about semis. Scottish Mortgage Trust, because they're bloody good at this. They've been doing it for a long time. That's the growth end of technology. And Tesla. Tesla is a bunch of these things, from Internet of Things to fully self-driving to robotics. There's a lot there in Tesla. I buy into the long-term thesis that this is a much, much bigger company than people understand. I don't care. I understand that people have a different view. It's part of my basket. It's not my whole bet. And you might take umbrage. I don't like ARK or Tesla's a bunch of rubbish or whatever you may be. But directionally, this basket gets it right. You can choose your own basket. Again, I'm not saying I have any source of truth. I just want to get directionally right because I can't find an argument to say this is not going to work over time. It's really hard to argue that when you've just seen what we've seen in AI. And so I just want people to focus on that, drop all their preconceptions aside, all the bear fest that's going on right now, and say, I need to unfuck my future 10 years out. What am I going to do, Raoul? This is what I'm telling you, the best thing I can do. The other one is digital assets. I've made this super clear. I think it's the best bet in the world. I think it's much better than the exponential age bet because it's exponential in its own right. And again, cyclical turning point on a secular trend. So very quickly, there's the chart Bitcoin. There's the logarithmic uptrend, 2 standard deviations oversold. This is where you want to be buying it. So that kind of makes total sense to me. And guess what? It's cyclical because it's cyclical based on global money supply within a secular trend. So the ups and downs in that secular trend are actually driven by money supply. Makes total sense. All assets are the same. So there we go. Bitcoin, global money supply. Global money supply's turned up. Where is global money supply going to be in 6 months' time? Tighter or looser? 0.0 chance it's tighter. Because inflation is going to fall just mathematically. So it either stays the same or it goes looser. So what it's saying is this is the point in the cycle. Crypto actually turned first. It turned first, then exponential age stocks, then NASDAQ, and everything else came in October. But crypto came, actually ETH turned in June. Forward looking, and I've been flagging this to everybody as much as I can. So I really like this. Here's the secular uptrend, cyclical downtrend. This is the point. Every time that happens, usually it's like 10, 20, 30, 50x from here, depending what you have. Bitcoin's not my bet here. I would probably choose to have Ethereum.